Welcome back, traders. Time to watch and take notes on another ICT lecture. This one for today is from his Storytellers series, Daily High to Low, June 21st, 2025. This one is fairly long, 45 minutes, so I'll try to shorten it by cutting out any ranting where he sidetracks away from trading or stuff that's not really noteworthy for my trading journal. Now, this is the most recent ICT lecture, and from his latest post on X, it looks like he'll be away until September, meaning no more lectures for at least 6 more weeks. So I'm thinking in the meantime to study and share my notes on another one of his playlists. Let me know in the comments what you want to see. I'm curious to know what my viewers are interested in learning. So with all that said, let's go ahead and get started on this one.
All right, we're looking at the daily chart here, and I'm going to take you quickly through this because you've been following me for a little bit of time. You know that we've been talking about that. Fair value gap right there. That's February 24th, 2025. And those lines now, and zooming in. And I mentioned how the market was basically inside this range here that's shaded. And it's going to take some kind of event, and I believe it's going to be military related, like out of the Middle East. I think that's going to be a catalyst to do that. And because it was Friday, because it was a day going into the weekend where there was no opportunity for anyone that's in the marketplace to remove themselves from risk, I thought that it was beneficial for you all to be reminded that don't expect new buying to send us to new highs. Okay, so I referred to a very specific element of this daily chart, and I was looking at that section right there. And again, this portion of this wick, so the midpoint or consequent encroachment of it to its close, that was going to be the heart of where the setups that you as students would be able to find, like a silver bullet, a market maker buy model entry, a market maker sell model entry, a unicorn setup, that type of thing, where the obvious things that I've taught as flagship setups from this compendium I put together and gifted to the community at large globally, you'll be able to find your setups inside that little section of price action. It requires a long period of time doing back testing and then also explaining with the best of your understanding at present. When you do your logging in your journal, explain to yourself in commentary over top the chart with annotations as if you knew it was going to happen. And over time, because you're seeing these things repeat, you'll see that they constantly repeat. These same little signatures, these things I'm teaching you how price is going to respect certain levels at specific times, they tend to repeat a lot. And because of that exposure, you will, by default, gain experience that you can't purchase by a mentorship. You can't purchase it by reading a book. You can't gain that by being underneath to someone's signal service. Sure, you could have the best trader out there that's live streaming and giving you the entry, giving you the stop loss, giving you the targets, but you're really not learning anything except codependency. And I'm not a mentor that does that. I'm teaching you all how to grab a pickaxe, grab a pan, and go out there and panhandle yourself. You're going to have to find it yourself. You're going to dig in the dirt, find your setups. And once you figure that skill set out for yourself, no one's going to convince you otherwise that you haven't found your niche, your model, your plan. And you don't need to tinker with it. Once it starts making you consistent gains, that's it. You're locked in. Now, if you want to start another model above that, that's certainly up to you. But in the beginning, you need to slow down and don't look at all the things that I share as shiny new objects. There's just something else I'm teaching because not everybody has an affinity for an order block. Nobody has an affinity that all of my concepts are going to be for them. They have 1 or 2, maybe 3 at most, and they live there. They bloom where they're planted. And by me saying I think that this little area in here is salient to the bulk of what's going to be required as a trader that learns under me, you'll find your setup in that little red box.
So far, before we get into the price action, we get a little pep talk about how it will take a lot of time and effort to find consistency. You need to put in the time, backtesting, annotating the chart, journaling, reviewing. Make sure to do all this with paper trading until you find consistency. Only then would it make sense to put real money into it. Also, you've heard this many times before, don't use every ICT technique in your model. It's highly unlikely that every single ICT concept will show up at the same time. Use what speaks to you, what makes sense to you the most. Only use 2 or 3 ICT tools in your model. This is how you will find the most success with your setups.
That high is Wednesday's daily high. So we're going to see that line referencing Wednesday's high because Thursday was a holiday. We're looking at this through the lens of running above that high, stopping out anyone that is short, and tricking individuals thinking that it's a breakout to the upside, so retail's going to chase that. I state in that video that I am not interested in doing anything until 9:30 open. That's interesting. So here we have the 1 hour chart. Now I want you to think about how I taught in the past market structure, and I taught how I use long-term highs, intermediate-term highs, short-term highs. I learned that concept from Larry Williams, okay, and it served me well since 1995, and I believe it's still applicable today. For instance, we have this high right here. This high is a long-term high on this 1 hour chart. Why? Because to the left of this swing high, we have a swing high that's lower than it, and to the right of it, we have this swing high that's lower than it. But then we have a high to the left of this one that's higher than that one. This is an intermediate term. This is an intermediate term high. Long-term high, intermediate term high, intermediate term high. And everything on the downside with all swing lows is basically the same thing. But we're also noticing that when we're looking at long-term highs and intermediate term highs, when you have these large imbalances inside them, and I taught this in lectures before, people that have been listening to me that are strong students, veteran students, they know that I said this. Intermediate term and long-term highs that have imbalances in them are going to be high probability setups, because this inefficiency is going to be much more meaningful than something that may form in a short-term high like this or a short-term high like that, even in here. So this long protracted buy side and balance, sell side inefficiency, that's what I used as my framework on Friday. I extended this buy side and balance, sell side, buy side and balance, sell side inefficiency, or BISI for short. You extend that forward. But if you really want to understand the marketplace, you're going to have to look at inefficiencies, order blocks, and PD arrays the way I teach it, and you need to cast them forward as far as 60 days in advance or 60 days in the past. Look back. And that frame of 120 days, the market's always dynamically referring to all of that. It's a constant continuum of referring back to those same data points. And those data points are my PD arrays, premium and discount arrays. So by extending this in the future, going through all this, we see on Friday morning, it pumped up above Wednesday's high right here, trades above it, and goes to the upper quadrant and pierces it of this buy side and balance, sell side inefficiency. These lines here, that's the upper quadrant, consequent encroachment, lower quadrant. And the low, I didn't want to put on it because I wanted you to see where that wick high is and that wick low. That's why it's no line on there. Okay, I'm just showing you the quadrant and the consequent encroachment level. So take a note of these right here, these levels, what they are. And when we drop down, you'll know what that stuff is when we drop into a lower time frame chart. And this is that inefficiency on the daily chart, or not inefficiency, but the section of price action where I said that you would see the bulk of the action for your setups that would yield the best, they would occur inside that little segment of price action. Now, right away, you can't appreciate what I just said there because you're looking at all this run up, which is the Judah swing, and you're seeing all this run down here. And that's what you as a new student or someone that's an action hound, the people that go and watch live streamers because they're thirsty, they're hungry, they want to get out there and just chase somebody else because they think they know something that they're never going to be able to learn. You're looking at all of the full range, and you're not going to be able to do that as a new student. You're not going to be able to participate in that as new traders. You don't know what you're doing. So by me teaching you a way where you can just limit your focus to, okay, this is a segment of price action. Now I just got to watch it in reference to time. And I'll talk about that in a moment. But inside this little red box here, that's that portion on the daily chart that I stated from Wednesday's consequent encroachment of its daily wick to its close. That's what this red section is here. This orange box here, this large orange box is this BISI here. So just make sure that you take a mental screenshot of what you're looking at right here, because when we go on the lower time frames, you'll get lost in the sauce otherwise.
So I'm definitely taking away from this video the importance of fair value gaps near long-term highs and lows. If you want a refresher on market structure, check out the 2022 mentorship episode 11 and 12. In my opinion, he explained it the best there and simple to understand. As for the 60 days look back and 60 days look forward, check out the core content month 5 episode 1. That is a little bit more abstract of a concept to grasp, but it will help boost your higher time frame analysis. Okay, so we're going to go ahead and zoom in, so make sure to take note of the orange and pink boxes.
You can see me entering up here above the Wednesday daily high and inversion fair value gap, and it drops down. Now, what you don't see here, what you do not see here, is the high of February 24th's SIBI, because that's exactly what I was keying off of. That's exactly what I was keying off of. That high level watermark of the SIBI on February 24th on your daily chart for September 2025 NASDAQ futures. That level is what I was looking at. And as it was sweeping above it, I was using the candlesticks in here. I was trading in the consequent encroachment of that candle there. I'm sorry, the rejection block of that candle. This candle's up close. Then this wick I used in this candle, I went into consequent encroachment there. And then I used the order block here, changing the state of delivery. And I went over this on X, so you can go watch that too. You can actually watch me do the execution entering in here. And you can see I left the screen like this. You can see it's not market replay. And I constantly show you that it's live data, so it's not anything fake. It's not, delayed data. It's not like NinjaTrader where you can delay the data and do all kinds of, malarkey with it. Everything is as it was happening. But more specifically, it was going to deliver as I said it was going to deliver in that little 7-minute and a few second long video at 4:50 a.m. Eastern time on Friday morning. So as it dropped down in here, it went into that segment of price action. I told you from the daily chart that this would be the bulk of where the ideal scenarios for you as students would see. So if this is a market maker sell model, in here you can do distribution, and then the low of it here, as it hits it, that's the unicorn. That's the second stage redistribution where the fastest delivery happens, and it goes boom, there it is. Okay, I was covering all this in here because my son, my youngest, who still lives with me, had an appointment at 11 o'clock in the morning, and I was not told in advance. So I was trying to babysit this as long as I could, but I had to scale most of it off and left one contract on to get to new week opening gap high. And once it pierced that, you can see it trading there. But I stated in that video at 450, I did not believe it was going to go below new week opening gap low. And you don't see it happening there.
So up here, ICT mentioned a change in the state of delivery. Now, where do you see the change in the state of delivery here? Well, according to some YouTube traders, you need a closure below an up candle for a change in the state of delivery. But ICT's last short entry was here on this candle, and there's no closure below any up candles. That is because you don't need a closure for there to be a change in the state of delivery. You heard it from ICT himself. This candle's wick moved below the opening price of this up candle and this up candle. So there's your change in the state of delivery. You don't need a closure. Change in the state of delivery may not be your thing. That's okay. You don't really need it, but I just wanted to point this out, in case you happen to hear another trader say otherwise. Now, once we went below this low, we have a market structure shift below an intermediate low. Now, even though we did take the sell side here, as long as you understand where the market is drawing to, new week opening gap, you can still have opportunities to get in, like on this fair value gap. You can have your stop above this high, which is also above 50% of that daily upper wick. And since we didn't get to the new week opening gap on this drop, you had one last opportunity here when price tapped into the daily rejection block, which is also in a premium on this decline, and you can get out once we actually hit the new week opening gap.
So here's the business. Here's February 24th's daily SIBI high. That's that purple or blue line here. And there's a high level line that's just above that, right in here. And the combination of the upper quadrant of this buy side of sell side efficiency on the hourly chart, that's what that red line is. You can barely see it, but it's there. And then here's the consequent correction of this buy side of sell side efficiency from the hourly chart. And here is the lower quadrant level. And there's no low or high level. Remember, because I didn't want that to show up in the hourly chart in this presentation. So it's this low of the rectangle here, and the high of that rectangle is the high and low of that 1 hour SIBI. I'm sorry, BISI. So we have a confluence of the upper quadrant of that 1 hour buy side of sell side efficiency. It is the February 24th of 2025's daily high of its SIBI, which is the same SIBI we've been talking about for months. See how this is a key level? See how awesome it is to know that these things repeat over and over again? Contrast that with classic support and resistance. How do you know the level that you were looking at or want to see it react to? How do you know it's going to have a reaction there? You don't know that, but I know. I know that these levels are going to repeat. They're going to be extremely sensitive, especially at key times of the day. So what do we have here? The market used that portion of price action. I told you where the bulk of the volume would be coming in for movement higher or movement lower. The best setups that I teach for the classic market maker buy model, market maker sell model setups: reaccumulation, accumulation, reaccumulation, smart money reversal. I was shorting at the very high candles using the logic that I teach with the PD arrays. That's not found in Wyckoff. By seeing this candlestick here, after it pierces above that, I know if I'm expecting it to drop down, because all this was a Judas swing. It's rallying up there, building in a premium. And I even tweeted or posted on X and said, built in a premium ahead of a wartime weekend. What could go wrong? That was my little hint to you, because if you watched the video at 4:50 a.m. that same morning on Friday, you already knew that I was bearish. You already knew that I told you it was going to overlap the new week opening gap down here again. That up close candle there is going to be a inversion fair value gap. Why? Because it's going to go up here and drop. Look at the bodies respecting it there. See that? I know that if that happens and we rally up, it's eventually going to sail through it. If it trades back up to it again, that could be an area where I could add to the position. But this also is another inversion fair value gap. But it's the first presented fair value gap inside of 9:31 to 10 a.m. So extend that forward. Why is it going to be inversion? Because it's bearish. It's going up here to go lower. It consolidates in here. The bodies are respecting what? The lower half. That's exactly how I teach my PD arrays. If you're bearish, you want to see them respecting the lower half only with the bodies, and no trespass in the upper half of it when it's bearish, and no trespass with the bodies to the lower half of it when it's bullish. It's very, very simple. That's not hard. That's not complicated. The market breaks lower outside of its 1 hour buy side balance, sell side inefficiency. And then once it does that, I want to see it start to pick up pace. Breaks lower. If you look at this level right here, this is the regular trading hours opening price on Friday. That's basically the 9:30 opening price. Right here. Right there. So from there, it rallies up. So if we look at that opening price in relationship to where the previous day's close was, and that you can see down here is 21,961.75. And that's regular trading hours closing price for June 19th, 2025. So we have a premium gap. So what is it likely to do? Pull back down to try to make an attempt to close the gap. Here's a setup inside that area I told you. That would be the bulk of every setup that you would want to look for. This easy, low-hanging objectives where you can just get in there and take something I've already taught. It trades up to the high, sells off. Consequent encroachment, consolidates, breaks lower, boom, gap closure. Draw to this minor sell side liquidity. And then we have the February 24th of 2025 daily SIBI low. And it draws down from there all the way into that level. And then keys off of that back up into that section of price action, which is basically Wednesday's closing price. And then what does it do? Sells off. Second stage redistribution. Sells off into the new week opening gap, as I said it would. The market trades back up from near the low of the NWOG up to February 24th's daily SIBI low. And then what's it likely to do there? Drop. Where does it drop down to? Upper quadrant, consolidates in here, and then we'll have to move a little bit further. But I'm going to show you stripping it away. I teach that there's a 70% likelihood that the consequent encroachment midpoint of the opening range gap would be hit by 10 a.m. Eastern time. Well, you know, I have the cursor on the screen as I did the screenshot here, and that's this candlestick right there. It's slamming into consequent encroachment of the opening range gap here, nails it at 9:59.
Okay, so there's a lot going on here. Turtle soup, first presented fair value gap, opening range gap, market maker sell model, 2022 model, new week opening gap. There are a lot of different models you can use to trade the price action here, but I think the key to success is to keep it simple and just use one reliable model. Don't try to mash everything together, you'll just get confused. Also, you can see the most important thing is knowing where the draw on liquidity is. You can see leading up to 9:30, we've taken out buy side multiple times, but there is somewhat of a buildup on sell side. Additionally, we have the new week opening gap down there, so all signs are pointing to lower prices. Once you understand that, entries should be pretty simple. Any short setup here will just work.
Breaks lower, does all the business here, and we're going to move forward in time. There's that breakdown here, return back into regular trading hours close. That was Wednesday's closing price. And then it sells off. Trades down almost to the NWOG's low, back up to February 24th, 2025's daily SIBI low, trades down to upper quadrant, hits it again here, sells off. Look at the bodies. Now here's where ICT got it wrong. Ready? You listening? All the trolls are perked up now. He's admitting he did something wrong. Yeah, well, I wore the wrong pair of shorts today. My wife didn't tell me I look good with this shirt and these shorts. And sometimes that messes me up sometimes. But in regards to trading here, what I messed up was I said it wasn't going to go lower than NWOG low. But look at the wicks. See, I was wrong. Look at that. It just went below it. And this one went below it too. But look at the bodies, because the bodies tell you the story. The wicks do the damage. And I'm going to leave it up to you whether you believe that that is salient or not, because price didn't do anything below that. There it is there. And it was marked time basically inside of NWOG. One more time, hammered up February 24th, 2025 daily SIBI low, just to close in no man's land between NWOG high and daily SIBI low from February 24th. Folks, that's a market make a sell model, okay? I sold the high.
Alright, so that's pretty much it for this lecture. He goes on for another 12 minutes with ranting and self-glorification, though entertaining, nothing really for my notes. You can check out the original video in the description if you're interested in hearing his rants, but I'm gonna stop it here. Thanks again for sticking around until the end. Until we have another 2025 ICT lecture, I'll either be putting out my own educational videos or I'll have to take a look at another one of his playlists. Haven't decided yet, but you can let me know in the comments what you want to see. Also, give this video a like and subscribe, and until I catch you next time, safe trading.